to build a successful trading strategy. A really essential topic in trading because without a good working strategy, your profits won't come. That's why we go in this video step by step through the process of building a successful trading strategy. So stay tuned because by the end of this video, you will know exactly what to do, which steps to go through, what to pay attention to in order to become successful with your trading strategy. So let's start right away. We will start on the higher time frame, for example, the daily one, because our first step is to find the underlying trend of the market. If I scroll out a little bit, then you see we are clearly making accumulation, distribution, accumulation, distribution, accumulation. So we're making new higher highs and higher lows in the market. So this market is definitely in an upwards trend. We are looking within the underlying trend for a trade entry into the trending direction. For that, we will move the time frame later on. But first, let's proceed on this one. Because now that we know that we want to go into the trade direction long, step 2 is following now. We are looking for the major support and resistance areas that could determine our trade area where we want to place our trade. So this is the area where we want to look for a trade entry. So let's check out. I will zoom out a little bit. And here we see the market has reacted to this level quite a lot. So there was a resistance in the market. That's definitely a level that we shouldn't forget about. To this level, the market has gotten already. So we see here the market has touched it, made it not through the first time, then second time tried, and then broke through at this point. Since there are not any major support and resistance areas to look for before we get up here, that's it for now on this time frame. So let's jump a time frame lower and look for an entry there. So we see the market has made an upwards movement right here, but then spent quite a lot of time within this area where it has reached the major resistance. But as we saw before, at this point, the market broke through that area and made a new higher high. But we won't trade the breakout right away because it could be a false breakout as well. So we wait for confirmation. So we wait that the market makes a new higher low. And if the market breaks through and then makes a new higher high, that's the time where we want to enter the trade. So I will mark this area. Let's make it a red line. So we know exactly that area where we look for that entry. Right here is the point where the market reaches our entry area. So this is where we put our entry long right here, putting our stop loss below the last low. Of course, this could be an area to place the stop loss as well, but I want to place it below this major support and resistance area just to make sure that we don't get knocked out of the trade too early in case of a spike down or something like that. So of course, putting this stop loss is one of our steps, a really major one. So the next step is to place a target or to define your exit strategy. So of course, it could be that you move your stop loss. Once the market is making a new high, you move your stop loss below the last low. This is, for example, a possible strategy, or you use an indicator. But what is definitely important is that you know how to save your profits. So you don't give away all your profits. So let's say the market has come right up here, made its way further up, your really beautiful trade, and you think, yes, big profits. But then something occurs, the bulls lose power and the market crashes down really fast. And you have not saved your profits, the market crashes down into your stop loss and you lose all your profits. Not only that, maybe also you have made a minus trade if you haven't moved your stop loss at the break-even point. So guys, please make sure that you have an exact plan how to save your profits on time. You can work with targets. For example, put your first target if you have saved one time your risk. So this would be something around this area, but then maybe a second target up here. If you use with 3 targets, your third one would be probably up there, which is still not the resistance line if you remember earlier that we have drawn in the higher time frame. So in this case, you could even work with 5 targets. So there's a lot of room in this area that the trade might go that high. And of course, Like I said before, for example, you use the moving stop loss, place it below the last lows. In that case, you drop out of this trade at this area and don't lose all. Or you use an indicator like the ADX for setting your stop loss. There are really different options. But what is really important in trading, there's no right or wrong for a certain strategy. So there's no right or wrong for trading this market. There are really different possibilities. So breakout traders would do the same trade we did in this case, probably. Some traders would use the pullback to enter the trade. Different possibilities. But all that is important is that you have exact rules. That you have a, of course, well-tested strategy, that you know that the strategy is profitable and, of course, repeatable. And that is the reason why you need exact rules in order to enter the market, to exit the market, and to manage the trade. Without these exact rules, no matter what happens, it's neither repeatable and neither profitable, because you will always change your rules, you will always change your exits, and this on the long term will definitely not go well. So please don't do that. There's no professional trader, no successful trader that trades without exact trading rules. So there are really things not every trader has to experience it himself or herself. And this is, of course, crashing your whole trading account and losing lots of money just because you haven't had the exact rules. Believe me, I've seen traders do that, so please don't do this as well. I've erased my drawings real quick, and then let's place the target up here. Of course, this is the upper target. If we work with targets, we would place different targets on the way, like defined earlier. But let's see what the market did and how it developed. The first target would be hit right here. Then the market goes quite some time sideways here in this area. Don't get nervous because of that, because the market is still on the run. We have not broken our last low, so it's perfectly fine. Don't get nervous. This is how the trade worked out, and we see our third target would have definitely worked well. The fourth one, it's hard to tell. Maybe here due to slippage might be working, might be not, just depending on the broker. But the third one definitely for everyone. And then the market dropped down again. And with the trailing stop, we see here accumulation, distribution, accumulation. The end of the trade would have been probably around the same area, because this is below the last low with a little room. So overall, definitely a good trade. So let's sum up all the steps that are necessary. So always remember, step number 1, what is the underlying trend of the market? You need to know the big picture before you place a trade. For example, if you want to do trend following on a lower time frame, it's always recommendable to do this within the trending movement, not within the pullback. On the lower time frame, it's sometimes hard to tell in which phase the market is at the moment, so therefore we need to take a look at the higher time frame, at the big picture, in order to be able to tell that. Because of course, within the trending overall direction, there's a lot more room to make big profits than in the pullback direction. Of course, depending on the strategy, you can also have a pullback trading strategy. Then it's, of course, the opposite around. Also, in that case, it's the best to take a look at the bigger picture first in order to be able to do that. So step number 2 is identify the major support and resistance levels. This is also really essential because support and resistance areas are areas where the market is most likely to react to. And in order to be prepared for that and to adjust your strategy to it, you have to know where those areas are. Then step number 3, go down to a smaller time frame and analyze the market there. And with the next step, then find a reason for entry. Like I said before, it's important to find a strategy and a system that works for you. You have to trade the strategy, you have to feel comfortable with it. Once you have found that and checked if it's profitable, of course, you need to check your strategy before you start trading it. And if that strategy is profitable, write it down, write all the rules down for your strategy, put them on your wall. So if I wake you up in the middle of the night, you know exactly what to do. And then you're fully prepared to trade your strategy successfully. But let's not forget the last 2 steps, which are to set a stop loss that prevents you from losing all your money. It's really essential. Do not trade without it. And last but not least, of course, use a target or a different strategy that saves your profits on time, the best part of the whole strategy, because that part cashes in your profits. That's it for today. You're fully prepared to build your own successful trading strategy. Don't forget those 6 important steps in order to build it. And if you like this video, don't forget to give it a thumb up. And if you haven't done so already, subscribe to my channel for more interesting videos to come. See you again next week with the next video. Bye bye.